everybody, my name is Florian. I'm a junior trading mentor at London Academy of Trading. I'm very excited to let you know that we're working very hard in the background on something new. We understand how difficult it can be for aspiring traders at the beginning of their career to build a strategy and a plan and get involved in the financial markets. And apart from the interaction that we have with the tutors on the floor and online, we are planning to bring in accomplished traders and accomplished market analysts that can share their experience, their problems that they had while being at the same stage as you are at the moment. Please feel free to follow us on social media for further updates. Hello everybody, this is Florian from London Academy of Trading. I'm honored to have on our podcast today Ron William. Ron, thank you very much for your time. It's been an honor and a pleasure. I've watched you on IG's webinars in the past where you were talking about psychology. I never thought I'm going to come to talk to you in person. So thank you very much for your time, Ron, and welcome to our podcast. How are you today?
I'm good, thank you. Happy season's greetings and best year-end success to all the traders out there that are watching, and thank you very much for inviting me to the podcast with LAT.
How was your year, Ron? Did you have a busy year? Did you have a busy end of the year? What you been keeping up to lately? Have you been traveling a lot? Have you done any lectures or anything?
Busy, active, focusing on both markets and mind. Markets in terms of the advisory strategy work that I do, as well as trading, and on the mind side, of course, the main focus of our discussion today, trade psychology and the world of behavior and performance. So it's been interesting, partly because this year started with a big boom in risk assets, and so a lot of healthy FOMO in the air that got pumped up. But I would say the second half was maybe a little bit more challenging for those that were looking to take profit and try to better understand some of the shifts, both in terms of the market environment, but also in themselves as they either took profit or looked to lock and load for higher gains. There's all different types of journeys that traders and investors take through different market cycles.
Yeah, nice. I guess, like you said yourself, Ron, I think the purpose of this conversation is to go into more depth when it comes to psychology, mindset, traders' behavior. And I think I'm going to start with a very simple question. Ron, I have a trade plan. I know when I enter, I know when I exit. Why is psychology so important? Why, I know what I'm doing. Why is psychology playing such an important role in trading?
Devil's advocate response. We think we know what we're doing. and especially when we have the super duper holy grail strategy, which hopefully is tried and tested.
I have it, yes, of course.
I searched for it for years early on when I was trading for myself and then working for others to do the same. Once we have skin in the game, that's when stress spikes. Whether you're in a profit or loss situation, actually, it can happen either way. And that's when we turn to animal spirits. And we have that survival instinct to react. And that's the reality of trading that most live traders, more specifically, and seasoned traders over time know to be truth. Now, the face value perception of trading psychology, I was just discussing with the LAT Dean Patty just recently on this, something that we both know and share as an often misunderstood trait. Trading psychology is seen as a non-tangible, unseen, soft skill subject. And so with that in mind, we tend to understate it. We tend to trade blindly without recognizing the importance of self-awareness, and until, of course, we hit those extremes and then need to sharpen up our learning curve and optimize the way that we behave and the way that we make our decisions. But the quick point that I want to share is the success equation of trading is an 80-20 rule. 80% lion's share trading psychology and 20% trading strategy. Now, I'm going to flip that the other way around. Trading strategy is everything, especially if it's tried, tested, and robust. But the decision-making process and then the psychology of our thinking when we're doing good or not is ultimately what wins the game. And of course, it's the mix of the 80-20, which is so key.
Yeah, very, 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 very well said, Ron. I know for myself, when I started trading 2 years ago, I went into trading. I thought that if I learn a few price patterns, I'm going to be able to just sit in front of my computer all day long and probably be profitable. But as I progressed through, I kind of struggled to understand whether my trade plan was incorrect, or I had the incorrect mindset. And until I've made that difference, my struggles continued. And obviously that comes from personality, approach to the market, and so on, which kind of leads me to one of the questions I would have for you. Do you think it's important to discover what kind of a trader we are? Am I an intraday trader? Am I a swing trader? Am I holding trades for a week when you probably go into the investing side of things? Because in my belief is that if you don't understand what you're trying to achieve, you're probably going to struggle to find your way within the market. Because I didn't trade before I came to LAT, and then trying to find where I belong in the market was probably the main challenge for me. And once I've discovered that, I've managed to find that balance in between psychology and trade plan, if it makes sense.
Yeah, absolutely agree. The age-old philosophy of know thyself is true in history as it is here and now, both in life and trading. And to bring it back to practical reality, knowing ourselves in the way that I have developed this framework over the years in terms of my own trading, but also coaching others to be successful in trading, is a combination of nature and nurture. Many would have heard the stories about the famous turtle experiment, with that open question: what makes a successful trader? Is it something that they are born with, or can they be trained? Now, the answer to that is a half reality. Trading's not for everyone, but for those that can have certain attributes and can train them in certain ways, they can develop some consistent and positive results. The way to do that is to better understand yourself, both in terms of natural attributes that you are born with, your survival instincts, your temperament, and your general stress response management. These are things that you are partly born with, which can change, but there are certain strategies that we need to use to do so. These are biological, neurological, and sometimes behavioral related attributes. The second part, nurture, is about the environment that we grow in, learn in, trade in, and how that changes and shapes who we are. So it's a combination of learning our nature and nurture together, and then developing what I call the 3-step roadmap to sustainable change. That is awareness, change, and transformation. And just as a quick point on that, awareness is step number 1. We mostly get stuck on awareness and we don't even get to step 2 or 3. So most people are subconsciously not aware of themselves. I mean, how many times we have a conversation about our psychology, our triggers, what we do when we're making money or losing. These are things that we don't really make time or educational safe space for to discuss. Whereas in the trading world, it's the mirror image that we face every single day. There's many other things I can add to that in terms of why this is important, but certainly know thyself, and know thyself both in nature and nurture is key, and it's part of what I call the roadmap to transformation.
Yeah, I understand what you're saying. At least for me, Ron, definitely trading has brought out the best and worst in me. I don't know, it's just something that I've discovered when in front of charts. I've discovered that fear of missing out. I've discovered that greed. I've discovered that feeling that I need to be involved, although maybe the potential is not there. But at the same time, trading has brought out I think, in my opinion, has brought out that consistency of applying yourself to whatever you do in life. It can be trading, it can be anything else, whatever field you're in. I think understanding what you're trying to achieve, I think it's the key starting point, if I can put it that way. I often talk to students, and because sometimes some of the students might not have had guidance until they arrive at LAT, and I think one of the first things I'm trying to tell them is maybe start by imagining the trader that you see yourself as being in the future, and try to work towards that. Will you have time to be in front of your charts all day long, or maybe 2 days a week, or something on those lines, and then try to work and build a trade plan and build your own psychology around that. Which kind of leads me to the next point that I would like to discuss with you. How do you think a person's personality affects risk management? I mean, obviously, I personally, I'm the impulsive type of person. I want to be involved. I want to be there. You know, I'm lucky. Obviously, I work at LAT. I'm in front of my charts as well as being with the students. But I consider myself quite an impulsive person. But I don't know what's your opinion. How do you think different personalities react when it comes to risk management?
So personality, according to my experience of trading and coaching others, as well as psychological studies, will impact 3 areas. One is our outlook on life or markets. So we can have a bullish or bearish or neutral bias on things. The risk is definitely a key component to that. And then also finally decision-making process. All of these 3 areas, which are critical to trading, are influenced by our personality. The other thing about personality is in a state of flux until our mature years. I think late 20s, early 30s doesn't mean that we can't change thereafter. It just means that we have to work a little bit harder to do so, because our nature and nurture attributes have developed to a certain peak level where we've conditioned ourselves enough that we mostly have to unlearn a lot of what we've built up over those years in order to better optimize into that successful trader avatar is what I call. So that's my immediate response to you about personality. What I would say though is, in addition to personality, and there are ways that we can quantify our personality using psychometric tests, and something that we do on the trading psychology immersion course with LAT. What's key is to also understand that trading, and this is something I learned from one of my mentors and leading trade psychologist, Dr. Van Dahl, trading is not about trading. It's not about trading the market. I know it is, bid and ask, buy and sell. I get it. That's what we're doing when we trade. But the real trade is our own identity. We're trading our current identity for, exactly as you just said, the future identity of who we need to be a successful trader. Now, if you were to ask me the question, traders that make it and traders that don't, because I tend to kind of ask those difficult questions just because it's the thing that we need to do in order to strive ahead. It's those who are not willing to change who they believe themselves to be. This is research I've done with traders and other trading psychologists. That's the challenge we all have, to kind of power ahead and to take that brave step, where at the start it's a lot of faith-based action steps that we take, because we don't produce results overnight. It's a lot of marginal gain, boring tasks that we have to take in order to produce the results, and we have to believe more in the process than in the results to be a successful trader. But that's the mechanics of it. The identity side of it is we have to believe that we have what it takes. We have to obviously have a healthy amount of confidence and ego, and all of this, of course, is key along the journey.
Yes, I agree. I think coming back to one of the points that you made, I don't believe that anybody takes. Talking about the trading journey, we all start on the belief that we are going to be successful traders, like with everything else that we do in life. I don't believe nobody takes a trade that they say I'm going to definitely lose this trade, but I'm going to take it anyway. Every trade that somebody takes on the market, everybody has the belief that that trade is going to be a winning trade. Otherwise, nobody would be taking that trade, in my opinion. But I think the next question that I would like to throw at you, if that's possible, is when at least when I started trading, when I came to LAT and went through the program, I was kind of judging myself too harsh. As in, after 3 weeks of going through the course, I said, well, I need to have some winning trades, But then, obviously, speaking to the tutors and so on, I've been assured that it's a journey, and judging yourself too harshly in the beginning of your journey as a trader is not something that we should be doing. But then, as we progress through the learning curve of trading, we might maybe becoming a bit slack in self-criticism, and you mentioned earlier on being honest with yourself. Do you think there's a fine balance between not judging yourself when it comes to how you progress, how you apply yourself onto the market, and judging yourself too much?
Having a critical mind is key, as well as accountability, and developing that response ability to the learning process. Having said that, of course, everything in moderation and in extremes is something we need to be careful of. Generally speaking, it is part of our survival reaction to be averse to risk, be averse to getting it wrong, be averse to losing. And to explain it another way, based on behavioral research, our sphere, we're twice as focused on the negatives than we are on the positives, and so that's just how we are. It's a survival reaction, and it's not a doomsday prediction that I'm making, but it is a survival reaction that we have, and some more than others. So that's something we just have to be aware of. It's good to be self-critical to a level, but not to the extent that it leads to self-sabotage of our psychology or our trading strategy. The second and final point I would make is this idea of results, and how long it takes to be a successful trader, or to improve the bottom line in terms of performance and monetary gains, is something that is definitely worth thinking about early on. And I agree with you. We tend to be very self-critical at the start, because because we have this perception in our mind of what a successful trader can be. Unfortunately, the old school perspective is get rich quick or overnight results, and it's more of a race than a marathon. Different traders can choose either path, but I think that the marathon, slow, steady, marginal gain approach tends to be more viable and sustainable, and you've got less chance of getting burnt out, more opportunity of long-term results.
Yeah, that's very interesting. That's very interesting, Ron. I think I obviously have a ton of questions for you when it comes to psychology, and I believe I could spend probably the best part of a day just quizzing you and getting some tips and tricks. But I'm aware that we also have to go through certain topics, because you have a busy schedule as well. But I think my next point would be is, I'm going to take myself as an example, because I'm a trader. I know how I behave in the market, and I'm wondering if you can give me some advice when it comes to, let's say you have a string of 3, 4 losses, 5 losses consecutive, but statistically speaking, if you have done your back testing and you know how your trades behave, you are aware of the fact that your trade on the long term will be profitable. But I still have that fear of getting into a trade after a string of losing trades, although I know that statistically speaking my trade is working. Do you think there's a way where we can tap into our psychology in order to not necessarily eliminate the problem, because maybe it's impossible to eliminate, but maybe improve our behavior while coming out of a string of losses and trying to trade with a clear mindset into the next trade?
Yes, although what I would say is it's case specific from one trader to another based upon their general psychology, but also the extent and shock of the trading loss. The model that I like to work with is called the grief cycle, and it's basically all to do with human bereavement originally, but it's very interestingly correlated with a shock event, whether it's in life or trading. And what I've noticed in coaching work with traders is that a trading loss can be a mini or macro psychological shock. And so the stages of that shock is: number one, shock; number two, denial; number three, frustration and anger, where we tend to revenge trade; and then number four, the all-time low, where we go through all kinds of negative self-sabotage and kind of risk of ruin behavior, where we tend to maybe risk more than we should, trade more than we should, and just break every rule book that we can imagine. Now, most traders will stay between shock, denial, or frustration, anger. The pendulum will literally just stay stuck in that left side of the cycle that I'm describing to you. The name of the game is to turn your lows into your highs. The name of the game is to turn your lows into your highs. So when we were discussing earlier on about, no trader starts their trade not wanting to win. Yes, but I encourage traders to experience, the losses in a way that they can capture the win thereafter, whether it's the next trade or several trades later. And I don't mean that in just a feel-good, high-spirited, coachy fashion. I mean that quite literally. According to a range of different studies, the biggest learning curves are from our hardest low experiences. Any surprise? Just think about a difficult time in your life, or in your trading portfolio, and most of you will agree with that. Doesn't mean that we don't learn from the wins. That obviously gives us the bottom line incentive, but in terms of just when we think we got it wrong, just when we think we've lost too much, or just when we think we don't have what it takes, that's when we soul search deep down inside, and we start to go through those difficult, heavy psychology and emotions that ultimately reintegrate into a better and stronger trader. So it's kind of like going to the gym. You work out, no pain, no gain, and it's that muscle breakdown that then leads to the stronger version of yourself, quite physically, but also in this case psychologically and emotionally. And then thereafter you can reintegrate, and then you can improve yourself as a trader. So I would say, remember the grief cycle. Look it up. It's developed by a Swiss psychologist called Kubler-Ross. The stages that we tend to get stuck in is shock, denial, frustration, and anger. We need to ultimately experience that. It's not a bad thing to experience that, but we need to not stay there for too long and go down that negative spiral. And then ultimately we need to shift from the left side to the right side, turn the low to a high, and capture that new success lesson through the P&L cycle.
Ron, I will definitely watch this recording again, because there's so many things that I believed I knew, but I don't, and that becomes a lot more obvious while I'm discussing the topic of psychology and trading with you. We were talking about how we go through losses, how we go through wins. I think one parallel I would like to make is, every trader has a trading blotter. They record their trades in, entries, exits, targets, and so on, whatever type of setup they had. But I'm not quite sure how many traders record their mindset at the time of a trade. Do you think that is important to have in our journal? How we felt that particular day? Were we upset? Were we happy? Were we in a particular state of mind that could potentially either make us be more focused, or quite the contrary, maybe made us be more upset?
Yes, and yes. Both are important. is the first point I want to make. Having a trading data plotter where you're actually recording your trades is as important as looking at your bank account statement. If you're not doing it, big problem. You're trading blindly, and you're not crunching the numbers and knowing the extent of your performance, for better or for worse. But what I often find is an over-dependence on the numbers, good or bad, and less time or bandwidth given to the mindset and emotional state that we are in from one trade to the next. And I went through a big realization to understand why, early on, why I found this challenging, even myself, but more so many other traders, as I was trying to communicate the benefits of this. And I think it's just the over-reliance on numbers, and we know, we're trained that the numbers really matter, and obviously that's bottom line related, and that is results driven. But the key point here is, yes, it's important, but it's as important as the process and the journey that we're on. The only way that you can measure the process, but also the journey that we're on along the way, is by having a mind journal. Think of it as a diary. Now, let me just flag out some useful focus areas for the journal, because I'm a big fan of journals. I use them all the time, develop my own versions, and I'm always helping traders to customize, what works best for them. First things first, the journal is your story, your trading story, your life and trading story. So in there, you need to be adding your psychological and emotional states. Where possible, do it on a story arc basis, so that you've kind of plotted a chart of your month to month, quarter to quarter timeline in experience in the market. Follow up with questions if you want to know exactly what I mean by that, and I can write a blog, or we can do another
100%
on this, and progress more. But that, I think, is quite important, because instead of just tracking the markets, you're tracking yourself from an emotional and psychological perspective. The other thing that I would say is have space where you can measure your habits. Habit trackers are super useful as a way of actually deciding what habits you need to have to be a successful trader. Are you doing it? Are you not? And then actually literally check boxing that on a regular basis to make sure that you're following it, and you're doing what you need to do. A lot of people use the calendar as a way of scheduling in the learning time or the routine, let's say a healthy start to your day in order to trade successfully. All of that stuff is good, but I would say a way that you can track your mindset, your emotions, some place where you can maybe capture ideas. There's lots that I would say there. Just as a summary: vision board, life wheel, gratitude exercise, where you can actually focus on the things that you feel you've benefited from day to day, week to week. The habit tracker I mentioned, a little bit of a calendar scheduling so that you can actually have that winning routine, task management, and the list goes on. One of the pain points that people have with the journal is consistency, which is the number one issue for most people, whether we're working out at the gym or doing a diet. Don't beat yourself up too much if you're not filling in your journal on a regular basis. I would say at the very least a weekly entry, to definitely monthly and quarterly. Those three time frames are critical. Day to day is up to you, and most traders have challenges with the high maintenance of a day-to-day journal. So do that if you can. If not, at the very least, weekly, monthly, and quarterly.
Yeah, that's very interesting. I personally I have a journal. I have a trade blotter where I record my trades. And one thing I've discovered is I have a section for comments about how I felt that particular day, and I found it quite useful to have a conversation with myself at the end of the day. potentially I had a setup and I found an entry and everything was pointing in the direction the moons and the stars were aligning, and yet I found myself entering in the complete opposite direction for no reason. And I discovered that at the end of the day, by just having that conversation with myself, and being able to extract some ideas from that, trying to avoid them in the future, I found it quite useful. But that is just me, and that just works for me, and that's just my process. But I fully appreciate your points, and they're quite strong points you've made over there. I think I already had on the list a question to ask you, which was the importance of having a structured approach to the trading process, if I can put it that way, doing the same things day in, day out, and like you said, with the journal, if you don't record it daily, recording it weekly, monthly, quarterly. But do you think repetition is important in trading? Because in my opinion, I might be wrong, is having a repetition in your process and how you apply yourself into the market can give us a lot of benefits. And even if you discover what doesn't work, at least it's not working, as opposed to continuing to do something inconsistently and not knowing why you don't progress. Does that make sense, Ron? Just the application of the same process for a period of time to discover what works for you, what doesn't work for you.
Yes, I'm smiling because I had a flash of two different types of repetitive processes, one that is successful, one that is an utter failure. So I want to highlight both and then let people decide what's best for them. The first one is the baby learning how to walk from a crawling position. If that is what your aim is, to take those baby steps into, from crawling into walking and then being the sprinter and going into autopilot and being successful in life, in profession or in trading, you choose it. Yes, repetition is the mother of all skills. And it gets to a point where your mind and body literally starts to follow this automatic, subconscious autopilot routine or drill that you've done. That's successful repetition, and I certainly recommend it. There's all kinds of examples across different professions of people that do that and do amazing things. The negative failure example is the fly that is trying to get out of the window that is closed. And it will fly into the window once, twice, 3 times. The old saying is, the definition of insanity is doing the same thing many times and expecting different results. You're going to get the same result if you do something that is not for your best trading outcome. So take care. Repetition by itself is not going to win you that routine in successful trading. It depends if what you're doing is viable and ultimately successful for your trading, which is why being mentored or coached, in the case of what we're doing here at LAT and on the trading strategy side, but then also on the psychology angle, is so important. You can learn a lot by yourself, yes, but then having that external trained voice and support really makes a difference. Also, if you're trading with other buddies, that really does help, so that at least you have a little bit of the community trading benefit. It can be competitive. It can provide that incentive to trade better each time and try and outperform. But also, there's lots of story sharing that can happen when you're trading as part of a group. And then, of course, the mentoring and coaching, which can focus on your best attributes. So remember, the baby crawling, learning how to walk and then run, versus the fly trying to go out of the window that is closed. You want to be doing the first, not the second.
Exactly. So we want to be the baby, not the fly.
One of the weird things that people will maybe remember from this discussion.
Yeah, be a baby, not a fly.
Yeah, for any parents out there, or for anyone who have family or friends that have children, the famous line is, we've all learned how to walk, and babies right here today are doing that as well, and many times they fall, and they fail, and so the joke line is, do you tell your own baby or whatever relationship you have to a younger one, to give up on walking, or do they carry on and repeat the process again and again until they successfully learn how to walk and then run? So that's what we're trying to do as traders, metaphorically. Practically, there is a way of doing that if we have a tried and tested strategy. And yes, a big part of it is repetition, but make sure that you're repeating the steps that will get you to where you need to get to. And so with that, you need to make sure that you're following a successful path. And yes, where possible, avoid giving up, because ultimately you can get there through good expert guidance.
That was a great answer, Ron. Thank you very much for that. Ron, do you think there is a roadmap to improving a trader's psychology? Do you think there's any exercises that one could do to improve the way they approach the market, how they apply themselves daily while at the charts, maybe just developing some patterns to help them, if that makes sense? Is there any exercises that we could do to improve our psychology while in a trade, or just before entering a trade, or once we close the trade, to stop us from entering again from the fear of missing out, or any other emotions that could take over?
Yes, there's always a routine that can impact psychology and emotion. I'd say the quick guidance point would be to pause, breathe, and reflect on what you're doing before the trade. Of course, having a focus of a successful trade helps, but then also knowing how to firefight through a difficult trade is equally important as well. So I would say develop your mindset routine, whatever works for you. Some people do light mindfulness, others do breathing techniques, some do visualization, whatever works best for you. What I would say most importantly is distinguishing between the different behavioral biases that exist. Often we think it's a one-size-fits-all. So FOMO, loss aversion, greed. Keep in mind that there are two sets of behavioral biases. One that is to do with cognitive biases, mental shortcuts. This is how we process information, how we make decisions. It's more based on the logical side of the brain. The other side is the one that I think most people talk about each day, is the emotional bias. That's spontaneous. It's got a little bit of survival instinct reaction in there. And each of those biases are dealt with in different ways. So it's really important that we become aware of the different types of biases, not the laundry list of biases, because that's a whole lesson in itself. Happy to talk about that in a future opportunity. What matters mostly is that you identify the difference between the type of bias, not just so that you can know what it is, but so that you can know how to manage and optimize it. And I would say that is then something that allows you to have a much better understanding and application of both trading psychology, but also the behavioral bias angle, which we all experience.
That was well said, Ron. That was well said. Thank you for that, Ron. Ron, I have two more questions for you. One question, probably the most important one, to be honest with you. What advice would you give to somebody that wants to start trading? What advice would you give to a student that just comes into LAT's trade floor, signed up for a course? What do you think, looking back at when you started trading as yourself and when you started going into psychology, what advice would you think would be wise to give to a new student?
Remember that
when
trading
it comes to
is
psychology, obviously. Sorry.
Yeah, well, trading and trade psychology, they're so intertwined. And remember that 80-20 success rule that I mentioned, 80% psychology, 20% trading mechanics. Remember that trading is a life skill. It's a life skill. You're learning how to manage your own money. And so you're going to do that when you trade, but you're also going to do that when you go to your own bank account. So I think it's worth, especially nowadays, with high inflation and various economic pressures out there, also those who are trying to be more self-dependent, to focus on trading as a life skill and as a way of improving our financial intelligence. There are many reasons why I think that's important. I mean, one, it's a life skill. Two, you don't focus too much on the immediate outcome of trading, i.e. the get rich quick mirage, and you start to think more long-term about this game. You start to think, okay, wow, this is a life skill. I'm going to think about this as something, as a way of living, as certain new identity that I need to be, as certain routines that I have to start to develop, as a learning path that will start now but will continue for a long time thereafter. I think more of that mindset and strategic long-term thinking is key. And then the only other thing I would say is be open to modeling successful traders. Going back to that turtle experiment that inspired me many years ago, part of the reason why I'm so passionate about trading, but more so coaching traders to be successful, is this idea that traders can be successful through training, but it's a training of both nature and nurture. You have to know yourself on both aspects, and then ultimately learn how to improve that self-awareness, develop change strategies, and transform over the long term. So life skill, financial intelligence, and then remember the importance of better awareness on your attributes so that you can trade more successfully over time.
That was a great advice, Ron. I wish I would have heard that before I decided trading. Obviously, I would have had probably a different approach to it, but we live and learn. Ron, before I let you go, I have one last question for you. Feel free to answer it or not, but you're a trader yourself. Because we're coming to the end of the year, if I was to challenge you to take a trade now and hold it for 1 year until next Christmas in 2024, what would that trade be?
Challenging question, because 1 year now is a lot longer than it used to be, especially as is my view, remains that we are late economic cycle from a macro framework, and what that means is many of the investment and trading opportunities now will likely transition literally into the new year of 2024, and so markets will likely be more choppy, volatile, more mean reversion. So for those who are swing traders, tactical, short-term oriented, there's many opportunities, but risk management is going to be key. And I would say in terms of which market, I'd suggest looking at markets which are inflation proxies. So the commodity area, I think, will likely trend positively into next year as inflation returns from this intermediate unwind that we've experienced. Then some of the safe haven trades like gold, but also alternative digital gold, Bitcoin, especially as we go into that halving cycle in the crypto space. And then ultimately trade what you see, up or down, based upon your trading style, your trading strategy, and then most importantly, the changing market environment.
Ron, thank you very much. Yeah, that was at least for me, that was a great chat when it comes to psychology, Ron. Thank you very much for your time. I really hope our viewers will find it as useful as I did, and I definitely look forward to seeing you and talking to you again in the future, hopefully with more insight in when it comes to psychology.
Look forward to it, and happy year-end and new year to yourself, the team, and all the traders who are watching. Carry on with your goal for 2024 to trade successfully. I look forward to meeting you all at some point in time, either in person or virtually. Keep in mind that we do the Trade Psychology Immersion course with LAT throughout the year, so I look forward to maybe seeing you there. And meantime, if you have any questions from this interview, let us know. We can follow up.
Thank you very much, Ron. It's been a pleasure.
Thank you. All the best.
And we're going to stop in 3, 2, 1. as just for the media team. Ron, you know what I just realized? I haven't asked you to introduce yourself at the beginning of the chat, and that is extremely rude. Would you like to do it now at the end of the webinar, and I'll ask the media team to cut it obviously and put it back at the beginning of the webinar?
Sure, happy to do so.
Yeah, I'm so sorry, Ron. I was a bit nervous and I just started on the question straight away.
Okay. It flowed and it was great energy and definitely common ground. So it's wonderful to speak with like-minded professional, and I appreciate your positive intention on the importance of psychology and also the personal experiences that you bring into the discussion. It brings it to life.
The whole idea, Ron, about this was, how to help students learn how to trade. And the only way I thought I could do that is by actually talking about what I've experienced. I've been a student here, and I'm sure nobody goes through different experience, because that is the journey. You go through the ups and downs, and you have to experience the ups and downs of the markets to be able to kind of form an idea. That's how I kind of got to this point of maybe thinking about doing a podcast about starting to trade and what are the hurdles, if I can put it that way. But anyway, that is just me. Okay, Ron, what I'm going to do, I don't want to keep it too long. I imagine you're extremely busy. I'm just going to start on 3, 2, 1 again, and I'm going to ask you, Ron, would you just give us a bit of a introduction about yourself, and then when you get to the end of it, again, I'll count 3, 2, 1 so the media team can cut it. Okay?
Okay, sounds good.
Okay. 3, 2, 1. Ron, would you be able to please introduce yourself to our viewers?
I'm a strategist, trader, performance coach using a holistic market and mind approach. Just briefly, on the market side, it's macro cross-asset framework using tactical overlays driven by cycles. That's part of independent advisory service that I do for financial institutions and professionals. And then more specifically to our discussion today, the mindset as part of the market and mind. That is using the latest techniques in behavioral risk models, neuroscience, and peak performance. The backstory that we can discuss in a bit is inspired by the turtle trading story, where the question is asked, are successful traders born or can they be trained? I've learned that training can lead to successful results because success leaves clues and we can model that. And so that led to a realization of the importance of greater self-awareness, better management, optimization of our nature-nurture attributes that can further impact as a framework that I developed called the Roadmap to Transformation.
Thank you very much, Ron.